Hey guys, so we're back in action with another update on my Vanguard investing portfolio. In this series, I invest everything I've ever made from YouTube since starting this channel over 2 years ago into this investing account, and we'll see how far we can take it. My goal at the moment is 100,000, and we're currently 68% of the way there. The idea behind this series is two things. First is to show you how investing over a long period in index funds works. This series will run at least 20 years and could be one of the longest running series on YouTube. And it actually shows you that you can start a side hustle, invest it, and hopefully use it to build a solid investment portfolio. You don't have to have 1 million subscribers to actually make a decent amount of money on YouTube. It is possible being much smaller. I mean, I've only got, 20,000 subscribers. This series is extremely transparent. I show you what I've made each month and how much I have in my accounts. So drop me a like, subscribe so you don't miss an episode, and let's dive in. So far things have been going pretty well. I had a bit of a blip last month where I actually really messed up my tax calculations, but now we're sorted and back in action. Let's have a look at how much I've earned in the last couple of months. My income is split into 4 categories. First, we've got ad revenue. That's the money I make from adverts that play on YouTube videos after YouTube take their 45% cut. I'm lucky with this that in general, finance does pay higher amounts than say entertainment, but the views, especially on UK finance content, definitely aren't that high. It's actually much lower, so it's kind of catch-22. In June, I earned £568, which is one of my lowest since January. I wasn't able to upload as much this month, so that's what happened. July was £782, which is actually my highest of the year, and August was £724, which again was a really good month. Interestingly, if I compare these to last year figures, I've almost doubled my ad revenue, which if I could do that again next year would be amazing, but who knows. I do feel that views are particularly hard in this niche, and deciding what type of content people want to see on a regular basis is also quite tricky, but I'll keep on working on it. I'd rather have less views with a more engaged community than more videos that no one really cares about. Quality over quantity. Next, we've got affiliates, which is a small percentage I receive when someone signs up for a platform that I recommend. This has always been my best revenue source for the channel. I'm in a fortunate position where I can recommend products that I actually use, so it's a win-win for me. June was a really good month at 1,929, still getting some coming through from the ISA season, which tends to be my best time of the year. £1,118 in July and £1,300 in August, still some really solid months. Next up, we've got sponsors. I've actually done less with sponsors over this period, mostly because sponsors tend to want to pause releases on videos over the summer, and people are all on holiday, me included, so it does make it harder to get things approved and signed off. June was a solid month at £825, but July and August both dipped at £250. I should have a few more sponsors lined up over the coming months to help boost us through to the end of the year. I would love to see how close we could get to that £100,000 goal by the end of the year. I would love to see whether we can hit it by the end of the next tax year, but we'll have to wait and see. It's quite an ambitious target, especially as the allowance this year is a whopping £60,000, and I'd love to be able to take advantage of it, but we'll see. I think so far I've actually contributed about £9,000 into that allowance, so still there's huge potential to add more funds. Finally, there is my Patreon where I share regular portfolio updates, and we have a Discord where people can ask me questions they might have, which does go a long way in making this channel viable to keep running. In June this did £175, in July £155, and August £163. This is really a nice little boost. It's not something I promote too much. I'm working on adding more value and resources to it so I can be more self-sufficient and not as reliant on ads and sponsors. In an ideal world, I wouldn't need to rely on either of them, which sponsors in particular can be a ton of work. But speaking of sponsors, one of my long-term sponsors, CoinJar, have been kind enough to sponsor today's video, as they're the only crypto provider that I use and trust. I wanted to take this opportunity to tell you what's been going on with crypto here in the UK, as it's been pretty huge. You might have heard that the FCA is cracking down on crypto, and rightly so. CoinJar briefly paused their deposits because too many exchanges were not complying with the latest legislation. CoinJar in the future is only going to accept deposits from either self-hosted wallets or exchanges that share their travel rule data. only one does so far, or exchanges with headquarters in the UK, EU and Australia and New Zealand. Crypto deposits from these exchanges are manually reviewed, however they will be automatically approved within the next few weeks. They're also ending their sign-up bonus, as it's no longer compliant to incentivize crypto sign-ups, so sadly that's gone. Starting from the 8th of October 2023, these rules will be in effect, and they apply to companies and individuals worldwide. These rules are essential to follow, as any violation could result in severe consequences. A breach of these rules is considered a criminal offence, which could lead to a maximum of 2 years imprisonment and a fine without limits, or both. These new guidelines have implications for both UK-based and international crypto exchanges. A huge highlight is stopping UK-based and international crypto exchanges promoting crypto services to UK residents, which is massive. This includes affiliates, comparison sites, influencers, crypto exchange review sites, and more. This is a huge change which should go a long way to protecting individuals from huge losses in crypto and using unsafe exchanges. What is very good, which is a huge change, is that affiliates and influencers can only promote FCA registered exchanges, and there's less than 20 of these on the FCA registered, and not even Coinbase is currently on it. So huge changes. I think the good thing is that people will be protected in this way, and it will let good, trusted exchanges like CoinJar shine. My total earnings for the last 3 months have been 8,137. We need to save 30% of that for the taxman, for income tax and national insurance, which leaves me with 5,695 that I can add to the portfolio. The good thing is that even though I do have to save the tax, because this is within a SIP, I'm going to get that boost on my deposits. So it's almost like I'm paying it in one way, but it's actually going into the pension. So now you've seen what I've earned, let's see how the market has been performing and how this has impacted the portfolio. Over the past year, the S&P 500 is up 13.42%, and over the last 6 months, 9%. While the S&P 500 isn't the entirety of my portfolio, seeing as my fund holds around 60% of the US, it has the largest impact on everything. And it's been a pretty weird one. On the one hand, we've had the highest inflation in the USA for 40 years, hitting its peak in June, leading to concerns about corporate earnings and potential recessions. There's been rising interest rates, with the Federal Reserve raising its rates to try and combat it, which in turn has made it even more expensive for businesses to borrow money and invest, which should stump growth. There's also been the war in Ukraine, which has been adding a drain to the global economy, causing energy prices to surge and disrupting supply chain. At the same time, China has been having an economic shutdown in recent months due to a combination of both the COVID-19 and a crackdown on the tech sector, in turn wiping 1.1 trillion off big tech in China. On the flip side, the US economy has added millions in jobs in recent months. An unemployment rate is near a 50-year low. This has been a positive sign for the economy, but in turn has raised concerns about wage inflation. With all that going on, you would think, why has the stock market risen? Well, it's mainly down to 5 companies. Just 5 companies account for 96% of the stock gains in the market this year, which is pretty crazy. These are now in the $1 trillion market cap club. Nvidia did particularly well after sales of its new AI chip doubled, and while that seems great, it could actually be quite a problem on the way back down. In particular, September has been pretty bad for the market, down 3.78% so far. What the Federal Reserve is hoping for is a soft landing rather than a recession, which could just be possible. This wouldn't be a sharp crash, rather than a gentle slowing of the poor conditions. In terms of our long-term portfolio, none of this really matters, but still in the short term, I think it's really interesting to see what's going on. So let's see how this has affected the portfolio. The total value of my portfolio right now is £68,390, with a gain of £2,611. If we look at this performance in more detail, you can see I've contributed £64,936, which includes my bonuses from the government. And the investments have returned to me £2,611, which gives me a rate of return of 5.86%. And in case you're wondering, the difference between these two numbers is because I'm still waiting for the latest tax relief payment for the government, which will top this up. We can break this down in more detail to see my current investment gain is £1,233. I've actually achieved a huge amount of interest on this account because of my cash position, £726. I've also had £738 in dividends, which has been pretty nice. And I can see my charges for the account, which have been £78, giving me that total of £2,600. By month, you can see July and June were particularly good months for the market. just over a £1,000 gain in both, whereas August and September have been a little bit worse with a slight loss. Definitely can't complain how the market has done over the summer. But you can see here by the cumulative returns just how impactful July and June have been on the portfolio. This cumulative figure is a total of how everything is doing combined. My S&P 500 one has done very well for the small amount I have invested in it here, just £8,000, but honestly this is very similar to my developed world fund, despite what happens to the market, if you're able to add cash on a regular basis. Mentally, doing it this way has been far better than the lump sum investing I've pretty much always done in my ISA. The reason I've always done that is because I would wait till the end of the tax year and see how much I've got to deposit. If we look at how my individual investments have performed, cash has been pretty great. £726 worth of interest. My biggest gains have been from the FTSE Developed World ETF at over just £1,000. The FTSE 100 is sadly my worst performing one, although the dividend rate on this one isn't bad, it's only returned £300. My S&P 500 one has done very well for the small amount I have invested in it here, just £8,000, but honestly this is very similar to my developed world fund. You might notice I've actually made an addition to the portfolio this month, which is this one, the Sterling Short-Term Money Market Fund. This is essentially a place to park some cash. It invests in things like fixed rate bonds and more complex things like bank certificates of deposits, commercial papers, and corporate and sovereign variable and fixed rate bonds. Yeah, you definitely don't need to understand that. All this essentially does is pay me 3.56% on my cash, which is paid monthly. Vanguard decided to cap their cash interest, so it's not quite as high as there. It's somewhere, I believe, around 2.5%, but that figure can be quite difficult to actually find. So on my £20,000 cash, I will get 3.5%. But to be honest, my cash position is way too high, nearly 30% of my portfolio. Warren Buffett keeps a cash position around 14% on hand, but even then he's doing it because one, it's hard for him to buy stocks because of the sheer amount of money they have, and two, he's trying to beat the market and I'm not, I'm just trying to match it. I just need to suck it up and invest it, which I may do soon. Maybe I'll put that one to a vote. I've always just liked, for some reason, the idea of having cash available if I need it. Plus the rate now isn't all that bad. What I'm going to do here though is make a couple of changes. The first is I'm going to sell my FTSE 100 ETF. The time has come to say goodbye. The FTSE 100 isn't actually super UK focused, as its business is a lot of overseas stuff, but it's not a particularly strong mover, and I don't see it being so in the future. I'm also going to get rid of my S&P 500 fund, which I'm sad to see go, but it doesn't make sense holding this as well as a developed world, since it's already made up of 60% USA. So what I'll be doing is using the switching tool. So if I select the fund and hit switch, I can select the two funds I want to merge and pick what I want them to go into. In this case, a developed world fund that I already own. So I'll be putting £14,400 into the developed world. I can see the charge will be 0.12% and I click submit. And it tells me that will be processed the next day. Now you may be thinking this portfolio isn't the most balanced, and you would be right. In the next episode, I will be adding another fund which will balance this all out, so don't worry. If you aren't subscribed, make sure you do so you don't miss that. I'm also either going to go all in with this cash or at least reduce it down to a position near a 14% for now, which I will be doing shortly. If we look at our total performance through the episodes, we're now 7 episodes in, and here is how the portfolio has been progressing. It's important to remember, if this does look insanely good, this is an accumulation of over 2 years and a ridiculous amount of work. I have been fortunate enough that YouTube has let me earn an estimated £50 per hour, but it occupies way more of my life than this. I could say you could at least double the time and half the rate, so maybe £25. I'm really happy we're pushing towards that 100k goal, 68% complete now, which is unbelievable, and we'll have to see where we go from there. While £1 million is the eventual target, doing this 10 times over at this rate would take 20 to 25 years. Of course, with compounding that will get much easier over time. The first 100k is definitely the hardest. The one consideration that's playing on my mind is I may want to put more into my daily goals, like a house, which may change my focus. I just love that 100% of this portfolio is purely from YouTube, which would be very hard to let go of. At the moment, I'm currently spending 2 days per week or more on this YouTube channel, which is essentially half of my week just to contribute to my pension, which is quite a lot. So maybe more balance is needed. Let me know what you think. If you're feeling positive and wondering how much you should have invested by age, check out this video I did right here. Or if you want to make yourself feel better, go and look at this video and all the ridiculously expensive investing mistakes I've made, which will certainly make you feel better. Thanks, guys.